You think price is going up. You wait for a good chance to buy. Price looks like it's breaking out, but then it suddenly goes down instead. You're left wondering what just happened. This is a trap, and most traders don't see it coming. I'll show you why it happens. See the problem? Traders keep buying here into supply because they're not looking at the bigger picture, the higher time frame that shows the real resistance. We'll get into that in the next video. It's a deeper layer of the trap. But before you can fix that, you need to understand the foundation, the smart money structure. Without this, you won't know how to read the moves price is making, and you'll keep falling into traps like this. So let me quickly show you the smart money structure, the way I teach traders to read the market properly and spot these traps before they happen. So I've basically marked this up as much as I can to show you what the real market conditions will look like. We'll walk through this first before we go on to actual price charts to see how this smart money structure works. So potentially this is perhaps how you're already looking at your structures. So we'll walk through from this era. We have a high here marked. We have a low, we create a lower high. So you understand the concept, the lower low, lower high in a downtrend, higher low, higher high in an uptrend. We continue to push down, we make a new low in the market, we pull back, a new lower high, a new lower low. We then make a new lower high again and a new lower low. See, price went lower. Then we pushed up to make a new high, a new higher low, a new higher high, and eventually a new higher low to a new higher high again. So if this is the way you're looking at your price, you'll be mapping out like this, seeing where you're creating those higher highs and higher lows. Now, if I just map it out with a arrow tool and walk through, you'll see the way these swings will look. It's all about understanding your swings in the market. And the market comes down, we continue higher, we pull back, and this is the way you'll be looking at your market, at your swings. Now, if this is the way you are already doing it, do drop down below in this video and let me know this is the way you're marking up your charts. And if you are marking like this, unfortunately, this is how you're getting caught in those traps. Now, stay with me because through this video, we'll go through the exact way to read the smart money structure that I teach. We'll also go through onto a price chart later in this video so you can see how this will work on any type of chart, any time frame. So this is the way I used to look at marking up my structures, by using those highs and lows. Now, understanding this, we can identify we create a lower low, we're in a new lower low, and lower highs, we're in a bearish trend. Then we go from a bearish to a bullish trend, continuation of bullish trend, but then we shift bearish. We break structure, and we're expecting price to come back to hold this area of supply, and then continuation bearish. But it doesn't happen. We continue to run higher. This again is another trap. But what we'll do first now is I'll teach you the correct way of marking up these structures. So you're not getting caught into these traps. You understand your foundation of structures first before we progress into understanding how to avoid those traps. So let's now just remove all of that off. I'm going to take all these off again as well. And then we'll walk through, and I'm going to make this as simple as possible for you to understand. I'm going to mark off an arrow each time to understand where you should be marking your levels. Now, the first thing you need to understand is we have a bearish and a bullish bias, and there's two different ways you will mark up your levels when it comes to your breaker structure and where we have what we call a valid high and a valid low in the market. So to start with, I'm going to create a level here. I'm going to mark this off. I'm going to label this as a current valid high. So let's mark it as a valid high. And let me just actually bring this across to the left and put it to the top, and we'll make it a bit bigger so you can see this. And then what we'll do, we'll just basically create a new one, and we'll create this as a valid low. Now, as we mark through this, you can do this as well yourself on your charts. It helps you to identify. And then we're going to create a break of structure. So we have a break of structure level. Now we're going to mark this off simply as a 4-hour break of structure. Let me just also highlight this bigger. And what we're looking for is where the market drops down in a bearish trend. When you're in a bearish trend in the market, what you're going to need to identify this smart money structure are 3 levels. You're going to need your break of structure level, your valid high, and your valid low. Now what this creates once you have your valid high and valid low is a trading range. And within that trading range is how you start to look for opportunities to trade. So a break of structure bearish is going to be when we create a pivot low. So we create this pivot low. Like I went through at the beginning of this video, we marked off this as a low and a lower high continuation. But the way we will look for a valid low is we have to identify, and I'll mark this off by an arrow, is the candle must close above the previous candle's high. So you can see this candle's high. Once we close above that high with a valid close on this candle, that's going to create a valid low we can mark. So at that point, we would mark off this as a valid low. Then as price does the opposite and we go to the downside and we start running through to this low, we're going to create a valid high here. And I'll go through the steps again, how you look for a valid high. A valid high is only created once we see a break of structure. So now we have this break to downside on this bearish candle. We can now create this as a break of structure on this time frame. Let's say we've got a 4-hour time frame. We've got a valid break to downside. Now, more later on as well on a break of structure. There's different ways we look at this, but this is to understand your structure. You want to see a valid close through. This now continues down and we're looking for that close up again. So this candle, we'll put an arrow below it, closes above that previous candle's high. This validates that low. Remember, we looked at this area here. So now we have a valid low marked. We look back from where we see the breakout point. We're looking for the close up again. And this is the last time we closed above. That's why this is marked as a valid high. So now you have your trading range. Let me just bring this arrow down a bit. So now you've got your valid trading range. We will use this valid trading range with your smart money structure to look for the pullback into areas of supply, understanding pricing areas of discount and areas of premium. Now all of this you can learn later on. But right now you need this foundation to understand exactly how to mark this smart money structure to stop you getting caught in these traps. So once we have this and we see the pullback, price makes a new lower high here and continues to push down. Once again, we have a new break to downside. So we can now change this to another break of structure. So again, we mark this off. It's a valid break to downside as we see this candle closing down. Now we can do the next step this time for a valid high. Once we see this breaking and closing down, or it's closed, we look back for the last time we see a candle closing up. Well, again, I'm going to mark it off with an arrow. Right there, that's the last time we close above a previous candle high. It must close with a body candle close above that high. Then we can mark this off, not at this candle, but at this high as our current valid high again. So again, we do the same process as before. This was a previous close up. We continue down. Does this candle close above? No, it doesn't. So it's not a valid area yet to mark. Does this one close above this candle's high? Yes, it does. So now we have a valid close up. We can mark that off with an arrow. Again, you can apply this yourself with arrows on the chart if it makes it much more simpler for you to identify. Once we've closed up above this candle's high, we're not going to mark off the valid low from here. We still mark it off from the lowest point down here. So now you've got your valid low marked. Again, price heads back up. You're inside a trading range. You're looking for reasons to sell this market with a continuation of bearish market. As price comes back down and we wick through this low. Now, where normally we were looking at price before, this was making your lower high to a new lower low. And then you saw a break of structure here. That does not become a valid high. Why? Because we don't have a valid close through this low. We've only had a sweep. And again, that is another trap that you're going to get caught in if you don't understand this smart money structure. So now we're going to go from that bearish move to a bullish bias. And the way we understand this is our current valid high in the market. We now wait for a valid break of structure. This candle closes through and creates a valid break of structure. So unlike before, we were looking for the close up. Now we look for a close down. So once we identify and we see this candle closing, we look back. Does this candle close below this candle's low? No, it doesn't. So we don't use this. We continue down to next bearish candle. Did this candle here close below this candle's low? And we just mark it above that candle, as you can see. Yes, it does. So now that means we mark off our valid low. Now it's not going to be marked off here because we swept through that low on this big candle. So we mark the low from the current low. That is where we have a valid low to break to the upside. And this is where things become more complex if you don't understand your smart money structure. Before, we were looking at price breaking from here, breaking this high, making a new high, a pullback, higher low, and a break of structure to the upside. Then we saw a shift bearish, and we couldn't understand why we were getting into a sell here, but price continues higher. Well, this smart money structure will show you exactly why. And it's another reason why you need to understand the foundation. This is a valid breaker structure, so we can mark this out as a new breaker structure. And let's just mark that out now. So this is our valid break of structure to the upside. So you've got your valid breaker structure. We've now got our valid low. Where's our valid high? Well, does this candle close below this candle's low? No, it doesn't. Does this candle close below this candle's low? No, it doesn't. Now we don't look back to close below this bullish candle's low. We look to the very candle before it. So does this one close below this low? No. Does this candle close below this low? No, it doesn't. So where's the first point we see it close down? Well, we don't get one. So when we see price continuing up here and we break this high, this is not a valid breaker structure. This is just a continuation from this low. And what you're actually going to see is that this is your full break. This is the first time we break out, a small pullback. Price is just pulling back into areas of imbalance. You're going to find continuation. And now the first time we see a valid close down is this candle below this candle's low. So now we can mark off this as a valid high. It's the highest point we mark off. Okay, not the high of that bearish candle, the high of the highest point. Now your valid area of a valid high is here to this valid low. So that becomes your new trading range. Now, do you see how this has avoided you believing that this was in fact a break to the downside and you'll be looking to sell with the new bearish trend? That stopped you. And what actually you can see is happening now is this is a push down to break through this low. Now, that's what we class as taking some liquidity. And we're running into an area here which we class as an area of leftover imbalance and into an area of basically demand. Now, once you understand the way to mark up your smart money structure and to read it correctly on the chart like this, it's going to help you to start to figure out why you're getting caught in those traps. So when we see price pulling back here and you're looking now for buy, you're not looking for continuation to sell, you're just looking for continuation to buy here. What do we look for? Once we have a pullback, we look for continuation to break structure. We break and we close through on that candle. So now what can we look for? We can look for that new low to be formed. So from this breakout, we look back. Does that close down? No, it doesn't. Does this candle close below this candle's low? No, it doesn't. Does this candle close below? Yes, it does. So now we can move our valid low from this low to this low here. Again, it's from the lowest point. Now, if this candle had have closed below this candle's low, let's say, and then we went up again, then our low would have been moved to here. And you'll see how we do this in real live markets in a moment as I go through to some actual price charts and mark this up. And then what we actually have is then we have a new breaker structure. So we can just mark that off as well. So this becomes your new breaker structure. And that is how you look at marking up your smart money structure. Very simple strategy to use in the markets. Now you've been through the basic theory of exactly how you're going to look at this smart money structure. What we're now going to do is go on to this Euro USD 4-hour time frame, and we'll do a replay mode, and you'll see exactly step by step how you mark this out. So this is current price. Let's just go back anywhere. And I'll grab that replay mode and we'll just start it. Like, we don't need to worry about how this works because once you start seeing the way you mark this up, it's going to make everything so much more simplified. And again, we're not going to worry about all this past price. We're going to start from this candle and move forward. Now, before we start, there's three things we want. We want a current high marked off. So we'll have this as a valid high, and we'll mark this out as the top. We'll duplicate this and we'll make this as a valid low. Very, very simple. And you can do this as well as we go along. And again, if you are finding that this is going to improve your structures, do let me know in the comments, because I'd like to know that this is actually going to help you going forward, understanding this new smart money structure. And we just need to break the structure, which we'll mark off as we go through. Forget about price in the back. Okay, let's just go forward. Let's make this a bit quicker, and we'll go forward with a few candles. And price is moving down. What we're looking for is a close up. We get that close up with this candle. So we'll just put an arrow so you can see the way we're doing this. We'll say this is a valid high up here, based on the fact that we've pushed down, we've created a close up, that gives me a valid potential low. So from this point, what we're going to wait now is for a break back down or break to the upside to start us in an actual direction. And we close down on this candle. So now we can go closer into this area of price. As we close down, remember, let's go into this. Once we see this candle closing down, what do we look for? We look for the last close up. Well, this candle, I don't believe actually closed up, but this one definitely did, where we've already got our arrow marked. We mark off the highest point is our valid high. Now, once we see it close up, which we do again, straight away on this candle, we mark off the lowest point as our valid low. And what this becomes down here is a valid break of structure. Now, let me just double check this low. Did we close it? Let's have a look. Low is 7329 and the close is 7330. So in fact, that is not a valid close. See, we didn't close through. So now what that means is, let's go back to how we had everything. We had a high up here, and this was in fact our valid low. We need to see it close through before we can proceed. You can see how quickly things can change. At one point we thought we was bearish there. Let's go forward a few more candles. And bam, there we go. Price pushes up to the upside instead. So at this point, we were looking at this as a potential area to sell from, and we've just gone straight higher. This is our current valid high at the moment. And the reason for that is if we look at where we see that last close up, okay, here that becomes our valid high. Now, as price only sweeps this low and we don't close it, we cannot use this as a break of structure. And what I'm going to do, take this level out of the way. So we continue forward with price and we're still waiting for a breakout. We haven't got a breakout until this candle. So now we have a valid break of structure that we can mark off. So we can mark this off as a valid break of structure here on a 4-hour time frame. So now the things change, because what we're looking for, once we see this candle breaking, we look back for the last time we see that candle closing up. So let's have a look. Do we close up anywhere here? No. So we continue looking back. That's the last time we see the candle closing up. This candle right here. So now that means we can mark this off as our valid high. We can use this high we've got. So now we have a trading range currently from this high. Now we're waiting for a close, okay, back up again. So let's see if we get a close up. We'll go candle by candle here. And we do. We get a close up on that candle. Remember, when we're bearish, we're looking for the close up. That's all you got to remember. When you're bullish trend, you're looking for that close down. So now we can mark this off as a valid low. So our structure now is from this high to this low. Now there's ways we'll look for potential trades here, but forget about the trade. Just remember this is the foundation you need to learning to read structure. We'll continue forward to see where we go. We're looking for a break back down, continuation or reversal back to the upside. Price came down, we didn't run the low. We just swept the low. See if we're going to break it or continue up. And price is moving very sideways at the moment. Now when we're in such a long-term sideways range, That means price is just basically chopping sideways. We tag the low to fill the market back up towards what we class as an area of supply pair. So now we could see a run down to run the low again or shift bullish. Let's see if we get a run down or a shift. We're holding currently at this area of supply, but now we get that shift. Now that's expected after we see a sweep to the downside. So now what we can mark off again is this is now a break of structure. And this is the way you do this with your structures. Now this is a break of structure. Let's zoom in and let's just grab this low at the moment. We know it was down there. But when we have the break to the upside, we flip. We're not looking for that close up. We're looking for that close down. So let's mark off the candle. Do we close down here? No. So we look from the breakout point. Do we close down on that candle? No, we don't. This candle closes below this candle's low. That becomes your valid breakout. So that's your valid low of the breakout point. Now we're looking for that close down to give us a valid high. So we don't have that yet. So we look for that valid high to be created. Let's just fast forward a few candles. Now you can see again, this is like that example we went through in the first part of this video when I went through the candles that I made up to look very much like price on the chart. We never close down here, so we don't create a valid low for valid high for break of structure. This is a continuation. Now, the lower time frame is going to give you a trend and potential buying opportunity, but on this time frame, it's showing you the continuation of this trend. Now, once we see this candle closing down, let me just mark that off. This candle here closes below this candle's low. That creates this high as a valid high. And what we're now seeing is a sweep of that high. Now, do we break up and continue bullish? If we do, then this becomes our valid low. But if we push back down, then you can see that's how price sweeps a high before we reverse. Let's go through a few candles. We wick through once again. And now we're starting to push down a bit. Let's just see if we fast forward. And we get a push up. So what the market did, it swept the high. It pushed down towards this area. We sweep these lows and we push bullish. So this now gives us what? It gives us a new break of structure. But we're marking it from this area. Okay, that's our breakout point. Not this high. This is where we see the first close down. So we sweep this low and then we break out to the upside with this candle. So again, we look from the breakout point. The last time we see the close down is this candle here. See how very mechanical this is for you. We mark this off as our valid low. We have a new breakup. Does this candle close down? I don't believe it actually does. Let's just check. We have a 9290 and we have a close 9293. So no, it doesn't. So at the moment, we don't have a valid high to mark. So let's go forward with price again. But straight away, we get this candle closing down. And again, this shows us the pullback is going to start. Now, do we mark it from this high? No, we mark it from the highest point up here. That's our current trading range. So if we're now looking for continuation to go bullish, we're looking for this area to hold as an area of demand. Otherwise, we're looking for another reversal back bearish. It's forward price, currently holding, but it's going sideways for a long period of time in the area of demand. Expect the break, which we get. So again, we have a new break of structure, this time back bearish. That becomes your break of structure. After the breakout, what do we look for now? On a bearish trend, we're looking for the close up again. And we get that right there on that candle. That means this becomes your new valid high. Not this candle closes up, but this candle is the highest point before the breakout. Now we don't have a valid low yet, and we follow price until we create that valid low. Right there, that closes above. So again, we can mark an arrow below it. And again, you can do this when you're marking out yourself. That creates a valid close up. There's your new range, okay? Your new trading range there to the downside. Very simple when you start to mark this up. Now we'll continue a few more on this 4-hour time frame. Then I'm going to drop all the way down to 1 minute to show you this works even on a 1 minute time frame. So continue forward. We're currently holding, moving sideways at this low, and we continue bearish. So now we get another break of structure, continuation of that move. a new break to downside. Okay, when we see that breakout, what do we look for? We're looking for that close up. So from the breakout, we look back. Where's the last close candle up? Well, either this candle here or this candle closes above this high. Doesn't matter which one, because we're marking off our high from the highest point before the break is right there. Now we look for the close up. We haven't quite closed this to see if we have. High is a 238 and our close is 242. So it is a valid close up. So what we can mark off again is an arrow right there to indicate that's a close up. And we don't mark it from this low, even though it's a higher low as such, we mark it from the lowest point. That's our trading range again. Continue to push forward with this. Price drops down. Let's just have a look now. The quickest way to look to see if you get a break is just check the chart. We don't break, we just hold there. So we're still making that pullback phase. Now price could reverse after the sweep or continue down. And again, we do continue down. So as soon as we see this, we create our next break of structure. Now there's ways you look for your trades, but this is just to give you that foundation of understanding the smart money structure technique here. Now, if you're enjoying what you're seeing throughout this video, do give me that thumbs up so I know that this is going to help you in your journey to understanding market structure. We're all about teaching you the correct path of your foundation when it comes to reading those charts. So now we see that breakout once again. What do we look for? We look for that close up. Do we close up there? No. Do we close up? No. We do close up here now above the high of that candle. Remember, just looking for the close up above the previous candle's high. So again, we mark it from the highest point. Okay, now if we'd have closed up on this candle, we'd have marked it from this high. Very simple technique. Now we've broken down, we don't have a valid low yet, so we continue until we get a valid low. We look for this with a close up. Whoa, I didn't get a chance to even stop the chart there. Let me just go back to where we see the close up. Obviously we know it breaks up higher, but we see that candle closes up. As soon as you see this candle closing up, you can mark your lowest point as your valid low. That's our current trading range. Now we know from this point we go straight to the upside. A new break of structure bullish, and we can mark it off as our next break of structure. And there's ways you're going to learn that using smart money structure with multiple time frames is the key. One single time frame is not going to give you enough information to take a successful trade here. So again, when we see this breakout, where's our last candle closed down? And that is our last close down, means this valid low stays where it is. Now, if we'd have seen a close down here or something on the way out, then your valid low would have been slightly higher. Again, we don't have a valid high until we see that close down. This candle has not closed below. Let's go forward another candle. We close back up. Let's continue with this move. And you can see that price continues bullish. We still haven't closed down. And now we close down on that candle. So right there, that close down gives you a valid high. Now, why are we marking the candle close down again? We're marking the candle close down because we're in a bullish bias again. So our new trading range is from this low to this high. And we're looking for the continuation to the upside. Let's see if we get a continuation. Market's sweeping down, we're moving sideways. And eventually we break structure once again. So we can now mark off this as our valid high. We bring it across and there's our valid break of structure. Now you want to see that body candle close here. Once we see that candle through that level, we look back for the last close down. There's our last close down. That means we can move this low to this low as our valid low. Now we've just closed down again right there, and that gives us our valid high we can mark. You're going to find these ranges will develop differently as price moves. We have a pretty strong move to upside here, a larger range, and we've got a smaller range created. So let's now continue with this move. Let's see if we continue to go bullish from here or we shift back bearish. At the moment, it's not figuring out how to take a trade with this. It's just figuring out how to read the structure. And we push bullish once again. So the process is very, very simple once you understand how to apply it. This is now another break to the upside with a 4-hour break of structure. And again, now if we just go in closer, do we close down? No, we don't. So we look back. That big candle is your last close down. Okay, you can do this very quickly once you start to understand it. This becomes your low. Now, if we had closed down here before the move up, or even if we had closed down here before the move up, your low would have been here or around here instead of this low. Now, we don't have a close back down yet. Let's go forward. Again, we didn't close down there. I don't believe. Let's have a quick look. We may have closed down. That may have been a valid high. Let's double check the low. The low is 777 and the close price is 774. So it was a valid break of structure. Now look at how price moved very, very quickly here. On a lower time frame, you may have finally set up still, understanding what was happening. So once we see that break to the upside, let me just mark it off. That does close down. So it also becomes a valid low to mark. That lowest point where we see the break to the upside. And that's where your range can then completely change from a larger trading range like it was into a very small tight range. And this can sometimes indicate a potential reversal is coming. Go forward. And nothing yet. We look like a continuation higher again. So there was no pullback phase. Continue. Then we put in this low. Okay, close back down on that candle and it creates our valid high. And again, we don't mark it from this candle high, we mark it from the highest point. And this is now our trading range. We've actually developed quite a strong move to the upside there, and we have this trading range. We also got this low created for liquidity sweep. But let's continue forward. We run through this low. Let's see if we're going to continue higher or reverse structure, and we continue higher. And that's the power of understanding liquidity. Before we wrap up, if you're tired of second guessing trades or stuck wondering why structure still isn't working, this is your turning point. There's a proven path where smart money structure becomes second nature and consistent profits stop feeling random. That's what Danny found after nearly $300,000 in losses. He didn't just learn structure, he mastered it and rebuilt his confidence from the ground up. If you're ready for that kind of shift, your next step is simple. Click the link in the description and apply for early access to the 90-day profit trading system today. So there you have it. That's the simple way of marking up on a 4-hour time frame. Let's quickly now go down from this point and we'll look at this as well on a 1-minute time frame. So you can see how quickly you can use this. And again, just quickly to look at, that's your last close down at that point. That means your valid low is here. We close down again right there. That means your valid high is there. And that's how simple this is. You can do this. So we're going to mark this off as our current valid high. And let's quickly just mark this off. Just want to show you that this will work on any time frame. Okay, it's not going to be just a higher time frame. It works on those lower time frames as well. And let's mark this out as a valid low. And we'll just put this to the bottom. And I'll just mark off a level as we break. So we're going to mark this off as a valid high. This is a valid low. The reason for this, very simple. We're in a bullish trend. That's a close down. Okay, and I believe this was a close down. Now again, we're not marking from this high, we're marking from the highest point. So we're looking for the continuation bullish here. Let's just see what we get. Price moving up. And as it's a 1-minute time frame, may move quicker, may move a bit slower. But there's your valid breaker structure. So we remove this across. We'll just mark this off as a level where we see a breakout. From that breakout point, we're in a bullish trend. What are we looking for? Well, hopefully you said for a close down. If you did, there is your first close down. That is a valid close down. We move our valid low to the lowest point before the break. And we wait for a valid high to be created. And there's our valid high. Once we see this candle closing down, we mark off a valid high. You can see the process is exactly the same on the 1-minute time frame here. So now we're looking for the continuation bullish or a pullback deeper to go bullish again. Potentially it can reverse, but we get the breakout. That's what we were looking for. And we get the break of structure to the upside. And straight away we can see we get a close down. So we can move this high up to here. From the breakout point, we look back. Where's that last close down? Well, it's right here. This becomes your valid low. Okay, it's no different to that 4-hour time frame. It's exactly the same. Let's continue forward again. You can see how this works. Looking for the break up again, continuation of the trend. Do we get it? Or are we going to shift back bearish? Price is moving sideways for a long time. Okay, we're moving all the way back down to zero demand. Will we continue up? Hopefully we'll see a new breaker structure soon. It's a long time and we get a breaker structure. Perfect. Continuation. So we pull back into this origin area of demand and we saw a breakout. So there's another breaker structure. Again, straight away we can identify, we get a close down on that candle. We have a new valid high. We look down from the breakout point. That's our last close down. And that becomes your valid low. Now I'm going to go through this a bit quicker now. Let's see how this works. You can understand the way we're marking it up. Let's look for that potential reversal. Let's actually speed this up a bit as well. Okay, we're looking for a potential reversal and we do get a reversal. The market reverses there and gives us a new breaker structure bearish. Now, once we see this breakout here, we're just looking for what? We're looking for that close up now. And straight away, there's a close up. That means your actual valid high comes all the way from here to here. And that's how this smart money structure moves with price. So instead of saying this is your valid high still, the old way of doing it may well have been this was your valid high, this was your breakout level. But this becomes a new valid high, understanding smart money structure. Now we're looking for that close back up again. Okay, and there's your close back up. That creates the new valid low. So that's your new trading range from this high to low, not from this high to this low. And that's how quickly price can shift as well, back bullish if we push back through, which we do. And we close on that candle right there. So from that candle, let's just mark out the new breaker structure. From that candle, we look back. That's the last close down, right where we see the candle closing up. So it stays as a valid low. And we actually got a valid close down right there. So that means that this was our valid high at that point. So now we've actually got a new quick pullback and a new breaker structure. As that's our valid high, it's also going to be a valid low on the break to the upside. So you can see how price quickly moves with that movement. Let's just slow this down a bit now. Let's see if we continue. And we do, we run back bearish. So a new shift back bearish again. Again, this is going to be my valid high because this is our last close up. Okay, I'm not going to put those arrows on the chart now. We'll just keep moving with price. Valid pullback, new valid breaker structure. Okay, this becomes your valid high. We didn't get a chance to mark off that low. Price continued. Now we get a new valid low created right there. And we're waiting for that breaker structure again. Moving sideways. We wick through the low to start with. And hopefully we can see a continuation. And we may get a reversal, and we do get the continuation. So very quickly, we can mark it off again. This is your breaker structure. Now, the way you look at this trap and to avoid this trap is understanding your smart money structure first. Now you understand your smart money structure, the next video we're going to look through is how to avoid that supply trap where you're buying into supply and taking loss after loss. That's coming out in a few days' time. If it's already out, you'll find it now to watch next. If not, keep waiting and it'll be out in the next few days.